You've got $10 billion in assets under management all told, Mike. And I'm interested as to how you weather the ongoing headline risk that we see about US and China.
Well, it's certainly there, and we have seen that, impact certain areas of the market. But overall, as we're, heading into, the bulk of the tech earnings season here in just a couple weeks, I think it's helpful just to kind of zoom out a little bit and see where the fundamentals are. And we've got an early read on that this week, of course, with ASML and TSM showing there's very strong demand. Oracle's Investor Day as well supported as much. And when we look at the returns thus far for the top of the market, I think one of the most interesting things to me is that we actually have not seen returns driven by valuations increasing this year. So, as we head into earnings season, I think it's a really good point to remember and kind of zoom out for a little bit of the bigger picture. And we'll see how this, China trade tension stuff works out. But the underlying fundamentals are very much strong.
Okay, what have the returns been driven by then?
This has been driven by this, increased demand and, overall just the expected earnings continuing to grow and clip along at very high rates. And, we're seeing that through, through the continued, AI demand. And I think strong fundamentals supporting the returns is a much better place to be than having that be driven by just the increase in investor optimism through valuations going up. And I really do think it's a very strong place to be as we head into earnings season to actually see valuations be at or below for a lot of these bigger names. And they really were even to come into the year. And I think investors really need to be aware of that. Especially those that are bearish on some of this continuation of the trend, because the fundamentals are very strong and it is supporting the price trends that we've seen.
Okay, so it feels as though you're not thinking there is some sort of bubble, but that's in parts of the market which have seen the AI, optimism really light fire. We've seen it particularly, as you say, TSMC, ASML. I just want to go back to some companies that are rallying today that have exposure to China in particular. I'm looking at Tesla, I'm looking at Apple, I am looking at ASML, which managed to calm our anxieties that they can continue to see the mega trend continue even if China falls away in terms of demand. But what about those companies that have high exposure to China? Is that something that you need to be anxious about?
Well, I think we need to go back to just what we've seen over the last 6 months with all of the tariff stuff. Of course, we're in this period where we're not exactly sure how this is going to work out. But when we look at the last 6 months, there has been a lot of fits and starts of tariff situation is going to be terrible, and then we ultimately get a deal. And look, I think overall the market has become a little desensitized to a lot of this back and forth tariff situation. I, for one, think that, ultimately, and Trump alluded as much in his interview, I think wants to make a deal. And so I think that should be kind of our base case here. And this headline volatility that we've seen, is just necessary for, that risk premium to be realized.
Mike, going back, therefore, to the idea of valuations, yes, they're high, but it's because earnings have grown into them. Where are you seeing the earnings likely to catch fire in this set of earnings for the companies that you follow? Because you are in all the major players when it comes to AI.
Yeah, that's right. I mean, when you look at just the top of the market, Mag 7 obviously comes up a lot. There's pretty big, divergence amongst that group this year. And so, some of the names that have been laggards amongst that group, the Teslas, the Apples, the Amazons, I think where that sits as what's attractive with the top of the market, I think that's probably still going to be the case, that in the medium term, those are probably still going to be the laggards. And the winners in that, AI group at the top of the market are still going to be the winners. And a lot of that, I think, has to do with, a lot of the smaller software and services type names have had a difficult time really kind of separating themselves and really showing unique value propositions for their products. And therefore, the market is kind of defaulting to what they know, and that is those AI winners. So I think, even amongst that top of the market in the Mag 7 names, the ones that have been doing well, I think, are poised to continue to do well. And the laggards are, at least in the medium term, probably still going to be the laggards.